Welcome to today's Canary report. Markets are cautiously bullish as investors navigate a familiar pattern. Strong tech momentum colliding with renewed Fed rate hike expectations. We're seeing the kind of mixed signals that keep traders on their toes. Nasdaq rallying nearly 2%, while VIX climbs more than 2% at the same time, suggesting confidence tempered by nervousness. Let's see what our canaries are telling us about where capital is flowing and why. The spec leader indices are all pointing in the risk-on direction, with ARKK and SPHB both posting solid gains today, alongside XLY consumer discretionary strength. This tells me that speculative money isn't fleeing into defensive territory, it's actively rotating into growth and innovation plays. The Plus Zero, 87% move across these names, aligns perfectly with the AI headlines theme we're seeing. Capital is still chasing exposure to companies positioned at the forefront of the technology wave, even as some investors question whether valuations have stretched too far. Credit markets are showing remarkable stability for a day where the VIX is creeping higher. The high yield index up 5.44% and HYG climbing 0.33% indicate that institutional money is treating credit as a core holding rather than an afterthought to trim. This suggests risk transfer from equities into fixed income has been limited today. Investors aren't seeing enough of a threat to justify meaningful hedging, despite the volatility uptick in the broader market. Here's where it gets interesting. The fear gauges are all underperforming, with UVXY down 2.73%, VIXY down 1.79%, and VXX losing ground at 1.51%. This inverse relationship, fear products lagging while markets rally, is a classic risk-on but nervous setup. The plus 2.32% VIX spike tells me traders are pricing in potential turbulence ahead, perhaps from the heightened Fed rate hike odds mentioned in today's headlines. Yet they're still willing to put capital to work, rather than lock it in defensive positions. The engine indices are telling a compelling story about where real economic activity is focused. SMH leading with plus 3, 75% as semiconductors and hardware manufacturers get the nod from investors who see tangible AI infrastructure demand. IWM's plus 1, 0.8%, and RSP's modest gains show broad-based participation beyond just megacap tech, which validates the real economy narrative that innovation is translating into actual revenue streams rather than just hype cycles. The safety trade shows mixed signals. Bond and TLT both advancing with plus 0.38% and plus 0.52% respectively, suggesting some flight to duration quality, while GLD's 1.42% drop against a 1.72% gold decline indicates. Precious metals are being treated as a secondary position rather than primary shelter. This partial rotation into treasuries, without abandoning risk assets, entirely tells me investors view today's volatility as temporary rather than structural. Capital is hedging slightly, but not fleeing. What we're seeing today is the market digesting two competing forces: strong earnings momentum in tech and AI-related sectors pulling capital forward, balanced against elevated expectations that Fed policy may tighten further post-wash. The fact that small caps are outperforming major indices alongside spec leaders suggests this isn't just a mega-cap concentration play. Broad-based participation is validating the fundamentals behind today's moves. That's your Canary report for today. The market appears positioned to hold or extend gains if the Fed narrative stabilizes, but that VIX elevation means we should watch for any sudden rotation back into volatility hedges tomorrow. Stay alert. The canaries are singing a mixed but not dire tune,